The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and my pleasure to be here. This is the 18th of November. Wow, can't believe the year's almost done. Had a lot of discussion in the den just a few minutes ago about peak Gs. In my CD, I don't know how many, I just went through it, how many times the discussions. I actually have something called the smooth peak G. There are a whole bunch of things, and everybody has different ways of using techniques. And I've always said that a robust system encompasses, embraces, enhances, complements other systems. And that's really important. So there are a number of people that use Gs in different ways. Over the years we've had, and Steve Rhodes has got a particular way that he uses peak G and trough Gs. And what does it mean? What the heck? What is a G? Well, a G is when you've gone, and let me just go here, when you've gone from an identifiable low to peak A, B, C, D, E, and then instead of having an instant restart essentially to reinstate a buy signal to buy mode, you have a parallel wave count. And it stops, instead of stopping at the 6 peak F, it goes to a G. There are times, and the reason how I learned about G, and the reason why I learned about the instant restart, trial and error, cost a lot of money to find these things out, is that within the context of going to C's and then finding out, having peak A, B, C, D, and then recycling, and it goes to an A, and then I said a B, a C, I'm expecting a D, and then it never happened. And then out of the blue was this one spike to the upside that went to the D, completed the move. It did it enough times that I eventually figure out that's how I got that instant restart. And that's why when I get the top of after an instant restart, there's a methodology that I have that says, no, it should only be a G. And there's a methodology that says, hey, G/C, and you can still later on get that D, be careful. So anyway, I thought it was fascinating. Nice discussion here. Everybody has ways of using their tools. Believe me, this is a discovery I found years and years ago, and it is just something that I love to see people working out in their own way. In other words, when I teach something, I like to say, I was once a professional clarinetist. I taught clarinet. I was a professional musician. I had a conductor. I had a professional chamber group that I conducted. And when I was teaching a student and they'd play something, and then they'd look at me with this quizzical look as if to say, was that good? I'd look right back at them with that same quizzical look and say, what? And they'd say, was it good? I'd say, what? And they'd say, I said, no, you played it. You're the musician. You're supposed to be the creator. You're telling me a story. You should say, that was fantastic. Or you should say, hey, it wasn't so good. Why are you waiting for me? It's yours. I gave you the tech. I helped you get the technique. I helped you. But now you're making the statement. And that's really what teaching is all about. When you teach, you learn yourself. And that's the whole thing. And one of the things that I think is so important is this. If you have a robust technique, I love when people can take it and extrapolate, and then the teacher learns, because that's the way it should be. It's a discovery, and a discovery means that there are other things that you can look for. All right, enough with that. But what I love about this chart, I just happened to pick. You see that arrow that goes up? Let me just show you something here. Let me see if I can do this. Yeah, you see this one here? You see the price going up? You see the red arrow going down? You see the price going down and the red and the green arrows going up? What's wrong with this? Just as a human emotion, when you see higher highs, that's usually good, right? Unless it's your blood pressure. And if it's on the way down, that means that the trend is down. So this is the way you want to be thinking of it. You want to be, unless you're a short-term trader, you want to be buying for the longer term. You want to be shorting for the shorter term. But sorry, buying for the short term, but long term you're going down, making lower lows. All right, so that's enough with that. Just things can lead to one another. All right. The S&P is down 5 at 2178. That 50-cent move in the E-mini futures actually went to leg C in the monthly chart. And what's really fascinating is that the 2185 high had just been pierced, and now we're having a little bit of a consolidation in leg B. Let me just do this. I'm looking, here's 100, you remember peak D? I make such a big deal about peak D. What does that mean in the Chapman wave methodology? You find the lowest low bar, you immediately count each successively higher peak. When you get to the fourth peak, that's when other things can happen. It doesn't mean to say you're going to go sharply down. It doesn't mean to say you're going to go sharply up. This is where you put the yellow light on and say, hey, I've made a profit. I can put a stop here and another stop lower down. And if it recycles higher, that's fantastic. I've got at least my main position, or if I didn't get stopped out, I've still got my core position. I can have a trading position as well. That's what's so important about this. All right, let's move it away. So what have we done? We went to a peak D in the E-mini chart, continuous contract at 2185 round number. I love round numbers. Pulls back to 20.78.50 the night of, going into midnight of the Wednesday after the election. And then what we've done is we've gone to a peak D. There's that peak D. There's that pullback that we were expecting. We went in a smaller rectangle formation after the larger rectangle formation, and just this chop, chop, chop. And that's what I've been saying. I think limited upside until we get to C and D in the down the S&P. Then you've got to be careful because there could be a sharper pullback, and we'll see what happens. All right, now let's run the numbers. INDU, are we running out of time? No, we've got time. The Dow is down 43 at 18,661. It needs 19,935 for leg C in the daily. The leg in the weekly chart is an F/A. If this is a doji close right at that Chapman wave inside track resistance, we're going to have to watch out for next week. And here's that rectangle formation that we saw in the E-mini, and we've got it here in the Dow. Sideways rectangle patterns can last a lot longer than your patience. S&P, SPX.X. The S&P is in leg B, made a high of 21. What was the high today? 21.89. It needs 21.93.82 to go to a leg E/A in the weekly and a leg C in the monthly. It hasn't done that yet. Let's go to the IWM. I did that. I actually sat in for Tom, Tommy, and Daryl in the last show, and I'll be doing Tom's show at 4 o'clock this afternoon. So yeah, we are looking at the IWM, leg B, the MACD is strong, the stochastic is at 96%, very strong. I think we go slightly higher to a C and then a D. Today has a parallel high of 130.83, 130.83, 2 days in a row. That continues leg B. If there was 1 penny less, it would be a peak B if that was the close of the day. I think that this is, remember, this is the hour, I said it from the last show, this is the 15 minutes that you're looking at to see if there's some stability in the E-mini. I'll show you the E-mini, and then we're going to take a break, and we'll be right back. Here's where you start to see, is there going to be some buying pressure coming in for a little bit of a snapback over the next hour and a half. Basil Chapman, Tiger Technicians, hour. I'll be right back. Dow's down 34, it's down 5.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. IWM at 130.60 up 29 cents. As I say, it's looking very good. It should go higher. Not that much higher, but excuse me, just had a little sip of tea there. Trader Joe's tea, which I love, English breakfast. All right, here we go. See that strong candle? Well, the month has still got another week or so to go. We'll see what happens. But so far, look, this is the second weekly candle in IWM. I think that the small caps are doing very well, and they are benefiting here. They don't have the dollar, all the intrigue, just a lot of things that are favoring them. They probably also have certain categories that are sectors that are doing well, that because there are many more in the smaller stock sector. Right, a couple of things I want to look at here. So gold, GC, let's see, 1207.9 down 9. I just don't see anything. I mean, the fear factor isn't quite there right now. You don't need gold. I just think gold is going down. I spoke to Dave White yesterday. We were discussing it. Yeah, both of us thinking that the 1180s is kind of the area that will be the very big test if it comes. But most importantly, I've been a bull on the dollar for just ever so long. Oh my God, look at that. It's up 52 cents, 101.41. That is absolutely, oh, what a spectacular breakout that is. See, that's what I wanted to see, because in the Chapman Wave methodology, let's see, oh man, what slide was that? The H pattern, I used it yesterday. I think it's going to be 339. Let me just type in here 339. 339. Let's see what it comes up with. Yeah, okay. So the dreaded H that goes to an M pattern, right there. And that goes, you see that pattern right there? Well, what's really important, there's the one I was looking at. That's the one I was looking at. If you put this upside down and invert it, that's what you've got with the dollar. And what happens is that the bar that takes out the left side low, let's invert it. The bar that takes the left side high of 100.39, 100.51, the peak B, peak C, that is going to be so important, because at 101.40, if we can get close to the 102, 103 level, it says you've got all of December to see whether it comes back inside or it actually makes a slightly higher high in December, and that'll be so important. That'll say that the euro is, in fact, going to go down and where did that disappear to? Where was I typing? Okay, type it over there. Oops, type it over. go on. I just did something. Hey, I don't want, that should not be lost. Oh my, what am I doing? I've never seen that before. Oh, everything's disappearing. Now where am I supposed to type the letters? All right, let me do this if you don't mind. I'm going to go out here. I'm going to close this workspace. Close the workspace. I won't save it. It's a pity because I put all that extra notation in. Oh, man. Give me 1 second here. I'm going to try. Oh, there it is. All back. Everything's cool. Don't get excited. I was going to go to the EUR-USD right there. You see, down, down, down. I was asked about this all week. We've been asking and saying, no, I think it's going lower. I think it's going to test the low of December 2015 of 1.0538. And there it is. It's at 1.057 right now. And that's not good for the dollar. I mean, not good for the gold either. So within this context, I'm looking at this and I'm saying, I think the market's figured things out. Look, the IBB, I'm jumping around. I'd said the other day, because it failed, I don't think it's going very far right now. And this is going to be a test of which stocks and sectors spiked huge on Wednesday a week ago and then Thursday, Friday. And which stocks did it emotionally and which stocks did it because fundamentally there is something there. For instance, the BKX index is holding beautifully at the highs. It almost looks like the interest rate itself. Stochastic at 92%. The MACD is good. And this is the KBW Bank Index. So within that context, I think that this is going to hold. I would say that on the next pullback, we could get a pullback that looks a little bit like this right here. I'm going to go a little higher because I think we could go a tad higher. And that'll be it. So 85, 40, 85, 65 right now on the BKX index, like F/B, I think it's a B, and I think we're going to go to a C and a D, matching the market itself. That would make this a down arrow right here. That's a Chapman Wave instant restart right there. This is just a perfect example of it right there. Always put a yellow circle when you see my yellow circles like this. It means that a D, it's been an instant Chapman Wave instant restart. It's complied with all the technicals that it has to do. And that says they're probably going to go a little higher next week with the other indices. And then we've got to be careful. So KBW, look at the KRE. Look at that monthly. You've never seen a monthly chart like this in the bank index. I can go back. No, it doesn't go back. It used to go back further. But well, let me go to the BKX index. BKX index, I think that also got bought out so that I've got it only going back a certain duration. It used to be totally notated. Yeah, look on the way up. I'm going to squeeze this, squeeze it again, squeeze it again. No, can't. Yes, I can. Yeah, there's that candle. No, it doesn't even match this one here. Look at that. That's a full green candle. That's a doji candle. Positive. It's called the Chapman Wave Roman candle. Very positive. One that I'm hoping to see in one of our stocks that we have on the long side. But it took. When was that? That was back in 1998. Wonderful. That was the last time the BKX index had anything remotely like this, and then it broke to a new recovery high in April of 1999. Now, think about this. It went to higher highs right up until December, January. Yep, January of 2001. But the S&P made its high in 2000 and March of 2000 at 50.57. So the bank index actually went even higher after that. So the October was the high of the market. The markets in 2007, and the BKX index, always the last to know about these things, went to February of 2007. No, it was the first to know about these things in this case. So we're going to be watching this because this is a tell on the market, I think. The fact that it's breaking out, there's no way I can call this a rogue wave G. It just doesn't have any of the characteristics. In the monthly, it looks like a B. Look at these monthly charts, the QQQ series. Look at that. The high was in March of 2000 at 120.50. We have traded to 119.66. I think that I typed that in. Yeah, We haven't gone to an all-time high. Look at the composite index, COMPX. Goes to, I have to renotate this again now. What a nuisance. Now, I wish I had my original notations because you would have seen what I was looking at the time. See, this, if you go, this is A, B, C, D. Bam! Right there at the top, March of 2000. And we are way, way higher in the overall 2000, about 2000, very large composite index, NASDAQ composite index. That's very good action. Now look at the chart, making a cup formation, but it really is a Chapman wave stalk leg formation, the one that we look at in the Dow. Look at this, Chapman wave stalk leg. There it is. Very interesting charts. Short term, got to be a little bit careful. I'll be back. Basil Chapman. Dow's down 38. S&P down 5. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back, and just a real quick look at the cash S&P. It says that it hit this support line here. It's above the 200-period moving average. It's going to try to have a leg. It's had a leg A, and it'll be very important that the cash, which is at 2182, gets to 2183.50, and I'd say within the next 10 to 12 minutes. All right, then we're going to go to our first caller. We got Brent in Martinez, California. Brent, how are you?
I'm doing well, Basil. Thank you for taking the call. How are you doing?
I'm doing well. And what would you like to look at?
The stock today is Transocean Offshore.
So rig is a symbol. Oops, I just messed up something here. Let me just go back again. 1 second, and we're all ready to put in RIG, Transocean Limited Oil Service, I believe is the exact title, and it's trading at 11.26, up 25 cents. I've got this as a leg D with an overlapping wave, so that always takes you to a D. Most importantly, when I look at the left side, right side, price time match, it's done it in a shorter time. This is interesting. I'm going to take 1 second. Now, while I'm just doing my little drawing here, you talk and tell me what you're doing.
Oh, I talked to you quite some time ago. I bought this way back in September at 880.
Correct.
And I've been holding the shares, and so it's kind of getting up to where I've envisioned that it could go. I just I have a tighter stop now, and just wonder your thoughts if you could.
Okay, so there are a couple of things that are going on. This is not a cup formation. This is a bowl formation. What's the difference? Well, a bowl formation takes a lot longer. It's a lot choppier, but eventually what it does, it uses, hopefully, not always, it has a plumb line that uses the same number of bars on the left to the right side. Preferably it takes it out beforehand, but a bowl formation can take a little while to do that. I'm using this bar right here of the 22nd of July. That's the stopping point, but it's the high that is the candle of the 27th at 11:54. To go left side, my plumb line is right here at the low of 868. I think that was the day that you happened to just happened to wake up and say, I'm going to be buying a rig. And rig went from 868 with it very quickly up to the 1080s. Then it pulled back, chop, 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 comes down to the low 9s. And then it starts to move very quickly to an A, to a B, to a C, and now it's in leg D. It's 1 day late from that exact plumb line match. Let me put this in so that people know what I'm talking about. And that says to me two things. One is, it's doing exactly what you wanted. We thought that it had a shorter time span to get into the 11s. It failed to do that. But basically, it's made a stair-step move with a lot of retracements up until the last week and a half. And the last week and a half, it's taken no more than maximum of 3 sessions, but most of the time it's been 1 session and the next day it went to a higher high. The speed with which it's doing that says to me, the stochastic now finally is flattening out in the 87 area. The MACD is still good. So here's what I'm thinking. Now, you had originally, I think, had calls. Did you take profits in the calls?
I actually have shares of it, Basil. I have 1,000 shares of it.
So I don't even want to mess. You're the guy that had this beautifully laid out. You had a plan. It's reaching a particular target because it's kind of getting to exactly where you thought there'd be resistance, and it's gone very quickly to there. I'm going to make the only suggestion that I can, and that's number one is follow your plan. All I'm going to suggest to you is that if it achieves what you wanted, then either you take a little bit off now just to reward yourself, 200 maybe, you still keep your core position, big core position, or you don't do anything at 1123. But I tell you why, because the weekly chart is improving enough to say that the chop, chop, chop in the yo-yo pattern in the H formation that goes to an M formation says that it could very well be on its way to the upper side now. Remember, these oil services don't often have a relationship to crude oil. They're in their own worlds sometimes. The bigger trend, yes, but in the shorter trend, they tend to, it's to do with profits and how they're managing it, and each company can be a little bit different. I like what I'm looking at. I'm only going to say to you, maybe you want to take at 1124, you don't want to give anything back, and that's different. But if you were prepared to have a little patience, I'm going to suggest to you, if it can get to 1150 Monday or Tuesday, preferably Monday, but it might be Tuesday, I'm going to say at that point you can start putting in a stop and have it as a printed stop rather than a mental stop. And that stop would be where we're at right now at 1124 on just a small part of your position because it's done what you wanted. But I like it. At this point, I'm going to say I don't want to be the one that messes around with your core position. You got in perfectly. You've had the patience. It's done everything that we're looking at. It has a pattern that it makes these U-shaped pattern formations that very quickly goes towards the upper part, the 12s to even maybe higher than that, might even touch 13. If it fails, you'll be prepared because you can have a stop on different positions at different points. I just like it. I don't even, in fact, I'm even going to say to you right now, even though it's leg D and probably making a peak D, the MACD and stochastic suggests that even if it pulls back maybe to 1095, it could still make a higher high. I don't really want to be messing with it other than to say, think it through. If you want to take a little bit off now and say, you know what, I'm going to put that back at 1070 or something like that. That's the only way I would do it. I think you've had your plan. I'm not the one to mess with it. I'm just going to say that that monthly chart has a lot to be, it leaves a lot to be desired. But you're going from short term to the medium term, and that'll be the weekly chart. And so far, the weekly chart has improved enough for me to say, holding very well. If it closes anywhere above 1120 today, there's a good chance next week you could see the 1147 to 1157 area. I like it.
Very good, Basil. I appreciate your help. Have a great weekend and have a great Thanksgiving if I don't talk to you, okay?
And absolutely same to you. And hey, this is your trade, your positioning. I have to congratulate you. You planned it beautifully. A lot of us are learning a lot from when you call in. You start these things and then you try to follow it through and you do succeed. We love that. Thank you so much for calling and have a great weekend.
All right, take care, Basil.
You too. Let's go to Greg in Austin, Texas. Greg, how are you?
I'm well, thanks, Basil. How are you?
I'm very well, thank you. You'd like to look at?
The GDX. I'm short the GDX via the dust. And what I'm wondering is, in the GDX and in the gold contract, could these both be a Chapman wave 2, or I'm sorry, leg B down, or leg B
this is
down in the daily.
Yes. Now let me just change. Why did I put FG? It should have been FB. Yes. In fact, from the pattern that we're looking at, folks, what we're talking about is Greg is looking at it. You know how we count the waves on the upside? He's counting the waves on the downside. Whoa, we've got a break coming up here. You know what? I'm going to do the nugget in a moment with my Chapman wave notation. So, oh wait, you said you were in, not
dust.
The nugget, in dust. I'll do dust. Dust to dust. We'll be back. Basil Chapman, Dow's down 36, S&P's down 5, and I'll just show the S&P cash. There it is. At peak F, struggling. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and we're on with Greg in Austin, Texas, and we're looking at both GDX, but he is in dust. And what I'm really looking at, I'm not sure whether to this should be an F. Rename this. It's a little unusual chart formation in the daily, but this could be a brand new leg to the upside because of the dollar's extreme strength at this particular point. But I'm just going to do this, if you don't mind. I'm going to look at the gold contract itself. And the way the gold is acting from that peak after rogue wave top way back on the day after the election, starting election eve, and then that evening going to 1338 and then plunging like this, really suggests that this area in the 1209 must hold. And it isn't. It's at 1207, but it is close. So this is going to be very important what happens. So I'm going to suggest to you, because you're in dust, and that's 3 times. This is called the Direction Daily Gold Miner shares. These are the 3 times short, right?
That's correct.
Okay. So what price are you in at?
1 moment here. 48.90.
Okay, that's exactly under the 9-period moving average of 49.18. This is what I'm going to suggest. Sometimes it's difficult to hold these over the weekend, and very often I've said, hey, if you've got a profit, yes, over the weekend you come back Monday and what you had could have skyrocketed. But what if over the weekend it does the opposite and you're unable? The dust, you can't trade until 9:30 on Monday, right?
Not until the pre-market on Monday, but essentially yes. I've had it happen both ways. One way,
Right.
you're after the weekend you're either in a losing position or
Okay, and that'll stay right up until it opens there on Monday pre-market. All right. So I'm at this particular point with the dollar so strong. I would say I'm comfortable because you've got a 6-point to 7-point gain. Do you have enough to take a little bit off now to give you some kind of a cushion? I mean, that's just the way I'm looking at it because we have no idea what's going to happen over the weekend. That's the only thing I think you're in the absolute right position. I just am not sure whether to say to you, hey, hold it, don't worry about it. Monday you can come back and it'll be at 63. I can't say that because the weekend we know anything can happen, especially with gold. So I'm just going to say to you, if you can take a little bit off to give yourself a cushion, means you're going to sacrifice something if it goes even higher. But that's better than being at the mercy of saying opening down.
Sure.
Well, you've got enough comfort factor to say that I can take something off and leave the rest on, and that'll more than ameliorate, unless there's just an amazing gap down in the dollar over the weekend. I don't think it's going to be that case. I think people are only waking up now to the fact that the dollar is really strengthening. So I'm going to say to you, this is only bookkeeping. This has got to do with money management. I say take a little bit off because it's the weekend. give yourself that little bit of a comfort factor and say, you know what, I'm going to hold it and let's see what happens on Monday, and then I'll deal with Monday as a separate unit. That's the only way I can do it, because you do have a good profit. You could just take your profit and walk away right now and say, hey,
I could.
if it spikes up on Monday, fine. That's I made my money. I just don't want you to sacrifice such nice profit if there's a mistake over the weekend. So what I'm doing is insurance. That's really. So think about, you don't even have to do it. I'm just saying, I would personally take a little bit off and say, hey, I'm happy, nice profit. If it's less of a profit, that's fine. If it keeps running, you want to see this, the dust, which is trading at 55.61, up 3.22. You want to see it at 62.73 or higher on Monday. And that'll be fantastic. Right. That'll say dollars going even higher. So that's really what you want to see.
To take out that candle of the 14th.
Correct, yes. So I hope that helps you just think it through. It's just a recommendation. You've had a real nice profit. I don't want to mess with your trade. You've done it correctly up until now. I'm just giving you a little advice, say, might be time to be a little bit cautious because of the weekend. That's all. If tomorrow was a trading day, I wouldn't say anything. But it's not. It's a weekend.
No. Thank you. I appreciate it, Basil.
I appreciate your call, Greg, always, and thank you for calling. Have a wonderful weekend, and good luck. We'll be watching your trade on Monday morning. Thank you. Have a great weekend. Let's go to Ken in Kansas City. Ken, how are you?
I'm very good, Basil. Thanks for taking my call.
My pleasure.
I'm looking at municipal bonds, in particular IIM. I just want to get your outlook on it and see whether a rate hike's going to be a negative effect on it, or what do you think?
So let's just put it this way. The IIM, which is the Invesco Insured Municipal Income Fund, let me just real quickly do a Chapman wave notation right here. A, B, C, D, brand new. A, B, C, D, E. And it goes to that F right there, E, and an F right there. Spikes up, goes to an F, and then plummets down. And it's got the look of, I'm going to do this. I'm not even going to say what it is. I'm going to say, what is the letter, Ken, that I'm about to type in here in very big, bold red?
Oh, I'm not on the chart.
But it's a letter that I'm going to type, the pattern that we're looking at. It's called the Eiffel Tower, uppercase A, straight up and straight down. Yeah. So now you don't have any position. What you're saying to yourself is, hey, wait a minute. If there is a bottom that's going to come in very soon in the in yields, a top in yields and a bottom in bonds, then this would be a lovely vehicle, even if it's just a percentage gain at 14.31, a bounce to 15.32, 15.78, which would be about a 35% bounce, would be a massive bounce in terms of the yield. But I must tell you that the pattern forming now looks just a little bit like the TLT. Let me go to TLT. Oh, TLT just broke down and went to a lower low. I'm going to make this suggestion. Because we're looking at something that's had a vicious 3 month, July, August, September, 3.5 month, maybe 4 month cascade from the high 17s to the low 14s, even a little bounce has to have some kind of a testing. So if you don't mind, I'm going to say hold off today. Call me either Monday or Tuesday. Let's look. I'm probably thinking Tuesday. Call me Tuesday. Let me look at it again. And at that point, there might be a trade, and the trade would say that for a 70 cent, I don't want to go for a 1%. So for a very small percentage, a 70 cent loss, you have the potential for a 3 times gain, maybe a $2.10. No, that's way too much. $1.30 gain. I think that's a 1 to 3. That's a reasonable 1 to 4 estimation. But I don't want to do it now. You could, if you wanted to, nibble it on it, because if it takes out 14.16, it's at 14.31. It could go much, much lower. I would say, you know what, over 15, 16 cents, let's just say you buy it because it's acting so well. You buy it at 14.77, 40 cents higher. I'd rather give up the 40 cents gain that you might make than to be trying 2 or 3 times with a 40 or 50 cent loss. So let's do this. Hold off, and then next week, early next week, let's look at it together, and then I might recommend just a starter position, and then I'll tell you how I would scale in. But at this point, I just think we need to see it make some kind of a low. It's close to, kind of close to a low, but let's wait. Is that okay?
Yeah, all right, Dazzle. Thanks. You have a good weekend.
You too, and we'll talk next week. Ken in Kansas City. I'll be right back. Dow's done 32.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. There are a couple of things, and this is why I'm making such a big deal about the 3 webinar series that I'm giving December and January. Go to the front page of TFN and check it out. You remember, what did I say? Peak Ds are so important. I discovered this years ago. Just the D, the fourth peak, is just so important. Look at this. There it is. That's the template. That's the schematic. Look what happened. Gap. Gap stores. GPS is a symbol. Look at that low, the little doji. I call this the silent doji. Doji low with the silent doji next to it on the October the 3rd, 2157. It goes peak ABCD. I was asked about this. Question is GPS. It had a bunch of others with it. Can't find it. All right. What about these retailers? So it makes it D, and then it pulls back. What I always say about that's the reason why I'm saying a very quick ABCD that's occurring now should have a pullback very soon. Look at the quick. It went to a peak D, the fourth highest peak on the 31st of October, 2761, pulls back in 3 days, and then it goes to 25, 48, and then it has a very quick peak A, peak B, peak C, peak D. This is all notated, but I didn't have the down arrow. And then I'm looking at this. I said, okay, GPS, and I look, it's down $4.60 at 26.10. Earnings must have come out. A peak D, sometimes you don't even get a chance to short because I usually like to wait for a peak D before I go because leg Ds can extend. Look at this. Bam, it's got a down arrow immediately. It's in a sell signal, maybe to a sell mode. The weekly chart failed at a peak C minus. The monthly chart made that peak E way back in 2014 in the 46-ish area. And this is a trouble. On the weekend, I will show my subscribers, and we're going to go through the retail index. We're going to go through different things, talk about what I'm anticipating coming up. So that's GPS. Next question, good question, is, well, I don't really have time for that. I'll have to do it on Monday, but let me go to quickly looking at, crude oil, the USO. Remember, I spoke about that. I think it's in a trading band, and it is. It's stuck. The USO is stuck, and crude oil itself is stuck between the high 47s and the 44s. Yeah, I just think it's kind of stuck there. So what we're really looking at, and what I will deal with on Monday, is what is the implication of the dollar being so strong? Look at this, up 54 cents, breaking out of the monthly, huge move up in the weekly chart. I can see a flag pattern forming at some point, but if this is A, we're still going to B, C, and D. I mean, that is really positive. So before I wrap up, let me just say, I'll be back for Tom O'Brien's show at 4 o'clock this afternoon. I just want to bring your attention to this webinar series that I've got. It's called the 3-session course on the Chapman Wave. It's called the Chapman Wave. Really what it is simple technical tools to analyze charts. Yes, you need to know some of the Chapman Wave, this is the counting, but basically I'm going to be showing the cup formation, the arches, the peaks, how to count them, what happens at a peak D, left side, right side, price, time match. I'm going to show you, I'm going to give you examples and exercises to practice both in the webinar and for you to do to check out the next time we meet. So it's December the 6th, December the 20th, January the 10th. They'll be archived during that particular period. You'll be looking at the charts. You'll be able to follow through with them. I'm really excited about this. This is like an ongoing Master Trader series, but it's really from the basics, the very basics, to a little bit more sophisticated. If you've done one of my courses, I guarantee you there's going to be a lot here that I've refined over the years, and I'm able to articulate in a very short way. There'll be a $100 discount for current opening course subscribers, paid subscribers, that is. And this is it's very exciting. The course is $295. This is for 3 sessions. I mean, I had a plumber here just recently. I don't know. I should become a plumber, right? Anyway, it's I'm trying to make this amenable and accessible to as many people as possible. I think it's going to be really exciting, especially in this time period, December to January. Oh, man. All right, folks, have a wonderful day. Have a wonderful weekend. I will be back for Tom O'Brien's show. And if you get a chance over the weekend, check out both my opening call and check out the upcoming webinar. Have a great afternoon, and I will see you Monday. Otherwise, I'll see you in Tom O'Brien's show at 4 o'clock.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,